Welcome to the AICPA Town Hall Series, your resource for the latest news and updates on pressing issues facing the accounting profession.
Good afternoon and welcome to the AICPA Town Hall Series. It's a very important time as we start the year. There's a lot going on and we have a lot of information to review with you today. So let's get right into it. We're going to have some broad opening comments, and then we're going to give you the latest related to the guidance that has come out from SBA and Treasury. Some is that just occurred last night. We're going to then just give you a broad overview of how we're seeing this next phase of PPP. We're going to also provide you an overview on the CPA loan portal, do a brief demo. And then we're going to also get into a very important topic, the ERC enhancements and PPP and some changes that have occurred. We'll always close with the open forum and closing remarks. And you can receive CPE by clicking on 75% of the attendance pop-ups. You've got this toolbar at the bottom. You can download today's presentation. There's also a new 15-page document, which we strongly encourage you to take a look at. That's going to address many of your PPP questions. And if at any time the video freezes, refresh your browser. You can do that with the F5 function or with Control-R. So today with me, and I'm Eric Auskerson. I'm one of the AICPA executives, and I oversee the business and technology subsidiary, CPA.com. Along with me today are Kristen Esposito, who's the Director of Tax Policy and Advocacy. She's going to be doing a little bit of a deep dive on ERC. We've got Carrie Hipsack, who many of you know, and she's leading up many of the tool development activities related to the PPP program. And I know you all know Lisa Simpson, who's here every week with us, and she's going to be giving you a very thorough overview on the latest related to PPP. So what's the hot topic? The hot topic clearly is SBA's announcement that they're reopening PPP. Things actually are tracking as we have projected. We did a bunch of town halls in the last 2 weeks of 2020. And if we looked at the timeline we highlighted then, it actually plays out rather accurately here. So where are we at right now? This week, the SBA started receiving the PPP applications. It started on Monday with these CDFIs, these smaller lenders. And now tomorrow, the SBA is going to be significantly increasing the number of lenders that can submit applications. And I'll be getting into that in a second. And then next week, they're going to open it up to all of the lenders. But let's talk a little bit more about what's happening with the lender community. Starting tomorrow, there'll be 5,000 eligible lenders that can start submitting PPP applications, these next phase PPP applications to the SBA. However, most of them will not. So you have 5,000 that are eligible. We think it probably will be under 10% that are going to be ready to start processing and submitting these loans to SBA. And then next week, SBA will open the window up for all lenders, in particular the larger lenders. That will be as of Tuesday, January 19th. But that doesn't mean that the large lenders will start submitting applications. And let's talk a little bit more about how this submittal process works. So the lenders are interpreting the guidance that's been put out by SBA and Treasury. And they're the ones that submit these PPP loans. We know the process, and when we can reflect back on what happened in April and May. So what is starting to occur again is lenders are going to have different processes related to how they fill out these applications. They're going to have at times different document requests. We're hearing, Lisa and I have been talking to a lot of firms this week, and they're hearing from some lenders that they're requiring the first PPP loan application, a forgiveness application, to be submitted. That is not a requirement of treasuries. However, some lenders are going to make that part of their process. So that's something we all need to understand. Our goal, like it was back in April and May, is to help drive a common approach and understanding. That's why we're putting out these documents. And we also think, even through our CPA loan portal, we can provide some broad leadership on how this process should work. Finally, the lender-agent relationship. We have a good understanding of that. You clearly need to have an engagement letter or some type of agreement in place with the lender if you want to receive agent fees. And our understanding is that most lenders do not plan to pay agent fees. So Lisa, I know this is kind of high level. We'll be getting into more details, but is there any comment that you want to provide on this slide?
I think your comment about lenders having different processes than are outlined is just so on point. We just got a question about a borrower who's trying to get into the line for a second draw, and the lender is saying, you've got to have that first draw forgiveness application submitted. So it is just important to understand that these are the processes that SBA has outlined, but lenders may throw up their own restrictions. So it might give you some encouragement to look for a different option.
Right. So it's a great segue, Lisa, into this next slide. So let's now talk about, so that last slide was status on lenders. So now this is looking at the firm to lender workflow. And this is something that I think you all need to be proactive about, is understanding when your clients' lenders are going to start processing applications, understand their process. And what we're recommending, and many firms are telling us this is what they're doing, is to have a centralized process to support these draw one and draw two applications. And with that centralized process, you then at times will work with your client in their original lender. But one thing that should be known is many of these loans were sold. So in some cases, the original lender might not even have that original PPP loan anymore. But you need to work with your clients, and some of them will say, well, I think it makes sense to go with the original lender. Then you have that path. It probably makes sense to have an alternative path because there could be issues with your original lender being live with the SBA, and also some of their processes may not be in line with what you think is a firm that they should be. So having an alternative approach makes a lot of sense. And we have built this CPA loan portal to help give firms options. Then after you work with your client to either go to the original lender or a new lender, that lender then decides when to submit to the SBA. Now, we based on their systems, have they built their API into the SBA, and also based on their policies. So they set their policies. Then that goes into the SBA. The SBA then is going to have a more thorough validation process. And this is why we're saying it's important to get it right, because some loans applications will be kicked back if there are errors. If there's not errors and it's validated, then you'll receive an E-Tran number. And then after you receive the E-Tran number, you'll receive the funding. So that's a little bit high level about the process. Once again, we think we're in a completely different position today related to April of 2020, and firms can be much more proactive. They can put in place capabilities. They can think through lender options. And yes, there's going to be all kinds of confusion out there. There's going to be confusion on how people interpret a portion of the act, and there's going to be differences by the lenders, as we just discussed. There's an opportunity to receive agent fees. If that's in your business model, you can receive agent fees and you can bill for advisory services. This is part of your business practice strategy. Great opportunity to gain new clients, then also set yourself up for a better forgiveness process by thinking through this now and being proactive. Quick update on where things stand related to forgiveness. We're all talking about getting loans in, but let's look at where forgiveness stands. And if you look at this chart, basically 1/3, a little bit less than 1/3 of the original 5.2 million in PPP loans have been submitted to the SBA for forgiveness. So 2/3 or almost 70% of the loans are outstanding. I can tell you the lenders want those forgiveness applications to be submitted. So they're gonna leverage this. They're gonna leverage this next phase to get those submitted. You do not need to submit a forgiveness application to go for a draw 2 PPP loan. That's per Treasury. That doesn't mean that some bank will not state that that's their policy. So with that, Lisa, let's talk about how the AICPA is seeing this and trying to build this common approach and understanding. So I'll turn it over to you.
Thanks, Eric. We have had so much activity in the last 7 days. Eric, I think if you can advance the slide, there we go. So just between the period January 6th through last night, again, once again, after I go to bed, they start sending out stuff. But if you look at the screen, you'll see what information we've gotten within the last week. And we talked about the 2 IFRs last week on the town hall. They are easy to read, well organized. So please feel free to jump into those if you have a question that isn't covered otherwise. It gives you some fascinating reads on theory and why some decisions were made. But then on Friday, we got the revised application for first draw loans, and we got the brand new form on second draw loans. So they're going to look very familiar to you. They're not dramatically different than what you have been learning over the past 8-9 months. So that should give you some comfort. Just last night, we got a procedural notice that deals with situations where a borrower wants to increase their first draw. We're going to get into that a little bit later on. And so I won't hold you up, but just to remind everyone, you're going to have to use some judgment on a lot of your circumstances. There are not going to be specific guidance issued around a lot of the detailed questions that you might have. So it's just important to look at the guidance, understand the intent, and then use your judgment documenting that judgment. So to that end, we have added a new resource that is in your materials. You were also given a link to it, and it was suggested that you do a pre-read on that, because what we're going to try to do is capture a lot of the intel and answer a lot of your common questions within this document. It's going to be, it was updated on the 10th, so it does not have this latest procedural notice that came out last night, but we'll be working on getting that updated quickly. You'll have a link within in the slide deck to always be able to check the most recent version. It's available on the aicpa.org/SBA page. These are a list of the topics that I've covered. So if you have asked a question in the Q&A today, we're up at over 300 or so already. You might want to go back in and check out this document first to see if it's going to cover your questions, because we've tried to simply walk through the first draw IFR and the second draw IFR to capture the main questions that are being asked. I do want to talk about a couple of things. We're already getting questions about the simplified forgiveness and how that's going to work, and whether FTE requirements are going to be included in forgiveness for the next round. And we are waiting on that IFR. The SBA and Treasury have stated that they will be issuing an IFR around forgiveness. So we're just going to wait and see what that process looks like. Using the ERC and PPP, getting lots of questions about that. It's a great question. We have a blog that just went live earlier today that Carl Peterson, who you saw last week, has worked on around ERC and PPP and the significant planning opportunity this provides for you with your clients. Chris Esposito is going to talk with us about that later in the show today. All right, so Eric,
this is a favorite topic here. And we're getting, the thing here is we're getting lots of questions. You've got the economic uncertainty affirmation. We went through this on round 1. This is what we called it, the self-assessment of need. This is a slide from April and May of 2020. So we know that some information will be made public. We know that it's important to do the self-assessment of need discussion, risk discussion with your client, and be aware of these future reviews and to document all of this. With all this said, the intent of this program is to support businesses. We had a blog earlier in the last year related to this from Barry Melanson stating about the intent of the program. So there is a lot of uncertainty. If you look at what's happening in the world right now, we've got a health crisis, we've got an economic crisis, and we've got this social justice ongoing dialogue that's occurring. So lots of uncertainty, and if you also qualify for that 25% reduction based on a quarter-over-quarter decline, you're probably in a pretty good position to say that there's a lot of uncertainty out there and you qualify. So Lisa?
Again, just document your circumstances at the time of the loan application and make sure that you've kept that on file. It's great. All right, so let's start digging in. And again, I'm not going to go into all of the details that we've covered last week. They're in that resource document, but I did want to give you a look at what this new form looks like. Again, it looks familiar. You've seen this before. Just a couple of new expense categories that we've talked about. It is asking for the first draw SBA loan number. Apparently that's quite the challenge to get your hands on. So if you are going to be applying for a second draw, start working on getting that loan number identified so that you're ready when the application, when you submit the application. You'll see that it's asking on the face of the application what the actual reduction in gross receipts is for the comparative period, and that is required information.
Hey, Lisa, I just was talking to a banker, and the best way to find that is obviously in the client's loan agreement. And people say, "Oh, we haven't retained it." You know what people retain a lot of is their emails. Go to your email, have your client go to their email, look for that document. That you need to have that number right. So that is a critical number, and you need to get that right. If you put the wrong number in, that probably is going to cause some real delays in the processing.
One other thing on the application, we're getting a lot of questions about how are we supposed to calculate the number of employees at the time of the application? It seems like a simple question. Apparently it's not. So we are asking for clarification around the 300 and 500 size standards for eligibility for the loan and what is to be included in that calculation. So we'll get back to you on that. For now, if you need to go ahead and apply, document your rationale and keep it in your file. All right, so I mentioned that we've got a lot of details in the document. This is an area that we continue to get lots of questions about. What's in gross receipts? So we touched on this last week. I've included some descriptions within the summary document, both for-profit and not-for-profit borrowers. We mentioned that PPP and EIDL funds are not included in gross receipts, so we have some clarity around that, but lots of questions around the other CARES Act and other types of relief funds. So for example, funds targeted at higher ed institutions, Medicare or medical provider relief funds. We are working on getting clarification around that. So I do not have an answer for you, but do know that we've asked the question and they're processing on it. Oh, another big topic. I had someone email me just before we came on air about, am I using cash? Am I using tax? What am I supposed to use? So let's just all take a deep breath and acknowledge that we're not going to get any detailed guidance on what method to use. So I tried to just frame it around the core concepts of, let's start with the first one. Does the borrower produce regular financial statements, either on a monthly or a quarterly basis? They can be internal financial statements. They do not have to be audited, reviewed, or compiled. They are what is the basis that the borrower is typically using, and it needs to be consistent. If they don't produce regular financial statements, so they just wait until the end of the year and bring in the shoebox and you sort through it, then that's probably not going to work for you. But the alternative is to use cash receipts from your bank statements. Obviously, if you've got capital infusions or loan amounts going into the deposits for a quarter, then you're going to need to back those out, document the steps that you've taken to go from total cash receipts to the amount that you're reporting as gross receipts for your comparative period. If you're a restaurant or if you're a retailer and you've got a point of sale system, start with that if that's a better approach for you. The point is you've got to be consistent, but don't overthink it. Don't
That's right,
overthink
Lisa.
it.
It's consistent quarter over quarter, and it's also assumed positive intent. They're looking, so this is where the CPA firms can play a huge role. You understand this, you work with your clients, and you keep the comparisons consistent, and assume positive intent. And then you're going to have to work with your lender. Again, this is one thing that the lender is going to also play a key role, because they're going to be the one that says that I've got the right amount of documentation or affirmations to support this.
Yeah, and we know that there are lots of complicated accounting methods. You've got contractors using percentage of completion and or completed contract. So their quarterly financials may not reflect those entries, but that's okay. As long as the methodology is consistent, then you can compare quarter in 2020 to corresponding quarter in 2019. Is there a 25% decrease in revenues? Yes, apply. If there's economic necessity, no, look at the next quarter. Hopefully that helps. And I know that we all want to get it right, and we all want to be as precise as we can be, but this is an area where that's just not going to be needed, to be honest with you. So another area that I wanted to make sure we talked about today was around the requirement to use all of the first draw before receiving the second draw. So if you look at the second draw application, the borrower will attest that they have used or will use all of the funds when they apply. But before they actually get the funds, they then have to say, I've done it. I have used all of the funds from my first draw. It does not mean that 100% forgiveness is required. As we've said earlier, it does not mean that the loan application has to have been submitted. You may have spent some of your funds after the end of the covered period. So maybe that's why you're not getting 100% forgiveness. That's okay. That counts as a use of funds on eligible expenses. Here's another one that you've got to keep in mind. At least 60% of the funds that were spent have to have been spent on payroll, on eligible payroll. And the standard caveat, again, let's go back and say it again, all of the first draw must be spent on eligible expenses. So I know none of you all have the clients that are running through cars and jewelry, but we just want to make sure that you're having that conversation with the client that says, did you use this on eligible purposes?
The key thing here, Lisa, it doesn't have to be, it can be after the covered period. So it just has to be eligible expenses. The 60-40% ratio applies. And what they're trying to do here is they're going to look for someone that took the original PPP funding and just bought cars and boats. That's what they want to prevent. And then that person getting a second draw. So after the covered period, it shouldn't be any issue. They're still in business to meet the 60-40 split of eligible expenses.
And let me clarify something there just before we move on. So if the borrower can apply by saying, I will use all of my funds by the date I get the disbursement. So they can go ahead and apply for the second draw and get that ETRAN number that we talked about at the beginning, because the system will stop accepting new applications on March 31. So a borrower can get that second draw application in, but then before they take the funds, they make that extra certification. So it's just a little bit more of a puzzle piece there.
Okay.
All right, so we knew from the Economic Aid Act that there was a provision for first draw increases. And we knew that that procedural notice was supposed to be coming out soon, and it hit last night. A key date here. This won't go into effect until January 25th. So you've got some time to work through whether or not you're in a situation where this is an option for you. It is important to note that this is not going to help borrowers whose first draw loans have been paid off, have been forgiven fully and paid to the lender. It is not intended to cover a broad range of circumstances. So it is limited to a few select circumstances right now that we'll talk about. It is not for topping off a loan where the borrower simply made an error, and it's not designed for a situation where these new payroll cost categories, vision, dental, life insurance were added in. That's not what this is for. So if we move on, you've got a few select occurrences where this is available. A partnership, I don't know if y'all remember way back at the beginning of this, but there was a lot of confusion around partnerships and whether partners were to be included with the partnership PPP loan application. The answer eventually came out to be yes, but by then a lot of borrowers had already submitted their loan applications. This provision allows for those additional partner comp costs to be added as an additional amount for the first loan. Gets a little confusing. But these three circumstances are only going to work, again, if the SBA has not forgiven the loan and paid the lender. Another option is for your seasonal employers, because there was a new calculation proposed under the Economic Aid Act. Same for farmers and ranchers.
So in all of this too, though, is the thing about, I mean, this is the end of January. They're going to give more guidance on this. I think right now, some good high level information. You can't just top off due to errors. There's got to be very specific reasons, and the primary thing to focus on right now is getting in these new applications. Draw one for someone who didn't apply before, or draw two for a second PPP loan.
Yeah, and they're also giving opportunities for borrowers who fully repaid their first draw before December 27th, as long as the loan was shown as canceled or paid in full, because they decided not to take it, they returned the money, or they returned part of it, or they didn't even accept all of the amount that they were approved for. The procedural notice is obviously brand new, lots to unpack through the lender process. So I just wanted to point out those high level notes to you.
Okay, Lisa, agent fees, something that we know it continues to be a focus for many firms. So what you see here is what is in the most recent IFRs. It shows the lender fee percentages and the agent fees. There is one category that is in the lender fee amount. That's not in the agent fee category. So for loans less than 50,000, lenders will receive 50% of the loan principal, or $2,500, whichever is less. We have had a discussion with some of the government officials, and what they let us know was the agent fees were just, that table was just taken from the original CARES Act, and this is being looked at. And based on these discussions, our expectation is for loans below 50,000, agents will be able to receive a $500 flat fee, or 10% of the loan principal, whichever is less. And that's actually how we're managing our CPA loan portal. And we think there will be FAQs or guidance issued related to that. So once again, let's look at PPP lending options. You've got traditional lenders, banks, credit unions, community banks, and then you have fintech. What all of these different entities are doing are providing a front end to the SBA. They're basically, they have application systems that are taking this information in from the small businesses. They're both submitting that to the SBA. The SBA then provides an E-Tran number, which enables the funding to be provided to the business. So what we're going to do now is we're going to do a brief demo in the CPA Business Funding Portal, which has thousands of CPAs as registered users. And as of this morning, there's something like over 4,000, close to 5,000 applications that have already been loaded into the system for this next phase. And I've seen some questions coming in. Is this portal and Biz to Credit going to be open and submitting applications to the SBA tomorrow? And the answer to that question is yes. So they are someone who they are in that 5,000 lender eligible group, and they are ready to start submitting the applications to the SBA systems starting tomorrow. So Carrie, I'll let you give us a brief overview of the portal. And this is something that the AICPA PCPS team is working in collaboration with Biz to Credit on, putting a lot of our guidance and recommendations into this platform.
Great. Thank you so much, Eric. And thank you everyone for joining us. A couple of quick things I'd like to mention before I jump into the business funding portal. One is that if you're a person that likes to follow along, please feel free to go directly to the link down at the bottom right-hand corner of this slide, cpaloanportal.com, and I'll go through some of the background while you have an opportunity to pull that up. As Eric mentioned, this is a solution for PPP business relief. There are two components currently available in the portal. One is for applications for this new round of PPP that we're in, and the second is the loan forgiveness application component. So those that might have received a loan in the first round and are now looking to get that forgiven. There are a number of features. One of the most prominent feature that you see right on the slide in front of you is the dashboard. So it really helps with maintaining your client records. There's user management and firm capabilities also within the portal. There's a variety of features based on the subscription model. So also if you take a moment to go to cpaloanportal.com, you'll see the breakout of features by the different models. I will be going through the free model today. So everything that you see is available without cost. One of the biggest components of a subscription model under the CPA loan portal is that you can get the agent fees that Eric mentioned. One more area to quick talk about are the different values of using the CPA loan portal. One is that it's user-friendly. I just have a few minutes to go through the portal, and that's all it will take to show the platform. It's also very quick. Eric had mentioned earlier about the E-Tran and the API system with the SBA. So there is an opportunity to get your PPP loan approvals a little bit quicker. Also, the portal is secure. When you go to that main page, cpaloanportal.com, there is some information about the security of the platform. And finally, Biz to Credit is a direct funder. So they are approved by the SBA to make PPP loans, and they are not an intermediary. So with that, I am going to jump on over to a live demo of the platform so we can stop talking about it and really see it in action. All right, so here we see the dashboard that I was talking about. I went ahead and logged in so we didn't have to use any time for that. And you'll see a summary of your portfolio here. It talks a little bit about your clients. This indicates the PPP forgiveness applications in process, that middle section. And then off to the right, you'll see the PPP applications that are in process as well. And as I scroll down, you'll see that I have 3 different test clients established. And if I need to go and open one that's already been established, I can click on the little button that indicates existing client applications and then go over to the action to complete the PPP app. Now I've pre-entered data, so no worries, no one has to see me type, but I did want to start at the beginning. So let's look at this process from the first question that you're asked. And the first question is if this is a first draw PPP loan or a second. Initially, let's look at a first draw PPP loan. Give that some time. Let me try and refresh real quick. Okay, I am having some very technical issues right now. And this is not working.
Hey, Karen, this is Eric. I don't know if it's the double of you being on the webinar and doing that. So this wasn't tested. I know in advance. I mean, the platform, thousands of it is working. So you're having some type of, unfortunately, demo issue here.
Yes. So what I can do, let me just quickly describe the process. So there are the two different segments. Once you get through that loan portal, the dashboard, excuse me, there are the two different segments. You can go for the first draw or the second draw, and it will just walk through the demographics. The first component of the portal it'll walk through is actual eligibility. So when you go through the eligibility, it'll walk through step by step the different questions. And if the answer is given that makes the borrower ineligible, you can't proceed in the process. So for example, I know the first question is if the business was in operation as of February 15th, 2020. And if the answer to that is no, the portal will pop up and say that due to the regulations, you're not able to apply for a PPP loan. And then the same level of integration is also included on second draw loans. Any borrower, any eligible borrower, let me clarify, can apply for a second draw loan if they meet those requirements that Lisa mentioned earlier. And one of the areas that we've received a lot of questions on is the gross receipts and the revenue reduction testing. So the portal will walk through the different options for those revenue reduction testing, and it will help you check yourself and make sure that the borrower is actually eligible. So that is a perk of the portal, is that it tries to simplify the process by giving you bite-sized pieces, right? I think a lot of us are very PPP. We're drowning a little bit. There's a lot of information, but the portal really takes it down to bite-sized level. So you have a screen-by-screen opportunity to enter the appropriate information. And with that, Eric, I know everyone's really excited to hear about ERC, and unfortunately the demo did not go as planned, so we might as well turn to another hot topic.
Yeah, well, why don't on that, let me just kind of give some wrapping comments here. But thanks, Carrie. And what I can tell you is that that just whatever we had, the multiple webinars to webinar kind of screens here that caused some type of kind of login issue, is that every day we're receiving reports on the amount of firms using it and the number of applications that are being uploaded, and it's significant. It will be open tomorrow, and what we're doing here is we'll be having regular updates on it that we're sending out through the notices to all of the registered users. And just the why on this, the why behind what we've done here is that building capabilities for the firms is critically important. That's one of the primary missions of CPA.com. And what we did in June of last year was decided that we knew that there'd be a next round of relief, and we wanted to take the AICPA calculators and build it into a platform which would give more options and more capabilities to the firms, and that's what we've done. And one thing, we're also looking to work with the lending institutes. There are many lending institutes that are leveraging fintech platforms, and we are open. If there's some local community bank in your town that wants to work with the firm and leverage a platform like this, we're working on affiliate programs. So it's really about us all working together to try to drive a common approach and to do this in the most efficient manner. So that's a little bit of additional background. And with that, we're still on track here with time, Lisa, and let's move to the ERC discussion.
Absolutely. I know this is another hot topic and lots of questions around this. So we brought in Chris Esposito. Chris is a director of tax policy and advocacy in our DC office. And she and I have been really getting to know each other this last month, especially as we talk about not just the enhancement to ERC, but the interaction with PPP, because now with the Economic Aid Act, borrowers who took PPP and are eligible for ERC, and you've got new borrowers eligible for PPP who'd already taken ERC. We're having fun. This is great. All right, so Chris, let's jump into it and learn a little more about ERC.
Okay, thanks for having me, Lisa and Eric. So let's talk about the Employee Retention Credit, or ERC as we refer to it. The CARES Act created it. We're going to cover a few basics. So the CARES Act created it, and the new law enhanced and extended it. And the new law is the Taxpayer Certainty and Disaster Relief Act of 2020, which was actually part of the Consolidated Appropriations Act of 2021 that was signed into law at the end of December. Even the name is a mouthful. So I'm just going to focus on some high-level basics today, but I will be co-presenting on an AICPA webcast next Friday, and we're going to walk you through everything in detail, everything you would need to know about the credit, including if you've already filed for PPP loans or even the loan forgiveness. So what is the ERC? Well, it's a refundable payroll tax credit, and it's available to certain employers during the pandemic. And when the CARES Act created it, they created the PPP loans and the ERC for the sole purpose of helping employers to retain employees on their payroll during the pandemic. So it's all about really employee retention. And most folks, you're all on the town hall, you are more familiar with the PPP loans, because if the employer was eligible for the loan, then they went with that option, since getting the loan actually put more money into their employer's pocket than the credit would have. And before the most recent law was enacted, getting a loan or claiming the credit, it was really an either or decision. You could not take advantage of both in 2020. So employers that received the loan, they didn't give the credit a second thought, and they just didn't need to. So who can take the credit? Basically, in a nutshell, there's no limit on the number of employees that a company can have in order to take the credit, which is good. And eligible employers include tax-exempt organizations. And in 2021, they said, okay, some governmental entities are able to claim the credit. And there are two tests that an employer would have to meet to take the credit. And in these tests, you look at the wages paid in a calendar quarter in which either the business operations are fully or partially suspended due to a government order. And government order is defined by the IRS and Treasury in their FAQs, or the business had a greater than 50% decline in gross receipts in a calendar quarter in 2020 compared to the same quarter in 2019. Now, there's something new for 2021 in that percentage is only a 20% decline. So that's actually taxpayer friendly, and we'll talk about that in a little bit. So there's a lot more to the credit, but those are the very basic principles. And the IRS currently has close to 100 FAQs on their website that explain who is eligible and how to calculate the credit based on the CARES Act. But they have not yet updated their FAQs for the new law. And we do expect them to do that very soon, next week, the week after, hopefully at the latest. So we can go to the next slide. So let's talk about some of the enhancements that the new law gave employers. So it made the number, it allows more types of employers to take the credit, and the credit actually increased. But then this comes with more rules to know. So originally, an employer could claim the credit for wages paid after March 12th through December 31st of 2020 if they met those two tests we talked about. Now the credit is extended through June 30th of 2021. The old rules will stay in place for 2020, but there are new rules for 2021. And then, as Lisa said, the showstopper in all of this was that PPP loan borrowers are now allowed to go back and see if they have qualified wages from March 13th to December 31st in 2020 and retroactively claim a credit for 2020. And they can also claim in 2021 as long as they're eligible. But the kicker is you can't use the same wages that you use for the PPP loan. So let's just table this for 1 second because we're going to get into a bigger discussion on another slide. Let's just talk about some of these other enhancements. So as I said, certain governmental entities can now claim the credit, universities, colleges, certain medical facilities, and they couldn't do that in 2020, but they can in 2021. And some of the other enhancements to the credit deal with the amount of qualified wages that an employer pays their employees. And those translate into an increase in the maximum credit per employee, which in 2020 was $5,000 per employee. And in 2021, it's $14,000. So these are all taxpayer friendly enhancements and changes, but they do come with some learning. And there are some rules that the IRS and Treasury are going to have to put out on that. So now let's go to the next slide and get back to our big ticket item of PPP loan and ERC Interplay. So now that a PPP loan borrower can go back and take the credit for 2020 and also in 2021, they have to think about, well, but we can't use the same wages for both. And that gets a little tricky because both the loans and the credit are based on wages. I mean, PPP loans, they have to be spent, primarily on payroll to be forgiven. And the credit is based on qualified wages. And, in 2020, employers weren't worrying about, oh, well, do I have enough wages for both? So now we're getting questions from PPP loan borrowers. Well, do you think we're going to have enough wages left over to claim the credit? I think in most cases, the answer is going to be yes. But we've been hearing from members concerned about this wage issue, especially if clients may have already filed a PPP loan forgiveness application because they've actually reported wages on that forgiveness application. And in cases where an employer filed an application for the PPP loan forgiveness, they actually might have reported wages in excess of the amount they may have needed for forgiveness because they just wanted that loan forgiveness. They just wanted to say, okay, I have more than enough to get forgiveness for 100% of my loan. That was all they worried about. They didn't worry about, well, let me save enough wages for this ERC credit that I didn't know I could get. So they're saying, can we claim a credit for the excess? And I'm just going to walk you through a quick example. So say an employer received $1 million PPP loan and they filed a loan forgiveness application reporting $1.5 million of payroll costs. They reported more than enough wages for the entire loan to be forgiven, obviously. So now when the employer goes back to look to see, are they eligible for the credit? They may wonder, well, can I put that extra $500,000 of wages toward the credit that I actually put on my loan forgiveness application? Because I really didn't need it for forgiveness, but I put it there because I just wanted to make sure I had gotten my 100% forgiveness. So there is no formal guidance on this yet, but I am on our tax advocacy team, and we have a letter ready for submission to the IRS and Treasury. It's just going through our final reviews. That is actually on this particular point, saying, hey, in this situation, we think that an employer should be permitted to claim the credit for any amount of that $500,000 of extra wages that are considered qualified wages for the credit, as long as they meet the other criteria to claim the credit. And I know, Lisa, that we've also added another scenario that our members have been, concerned about they're going to run into with their clients. So say an employer received that same $1 million PPP loan And they reported that same $1.5 million of payroll costs on the loan forgiveness application. And again, that's $500,000 more of wages than they need for the loan forgiveness. But the employer is now saying, well, I also incurred $100,000 of rent expenses during the covered period, but I didn't report them on the loan forgiveness application because it was just easier to record the wages. And I had more than enough wages to get my loan forgiven. So why did I bother having to, put utilities or rent or whatever? And in that situation, we addressed it in our letter as well, saying, well, the employer should be able to claim the credit for any qualified wages that are included in $600,000 of payroll costs. It's the $500,000 of additional wages, the excess wages that were reported on the PPP loan forgiveness application, and the $100,000 of rent expense they could have used instead of some payroll on that form. And we're not saying that, we want these PPP loan forgiveness forms to have to be refiled or anything. No, we're just saying that if an employer is actually doing the calculation for their employee retention credit, that they just keep record of, what wages they actually had that could support both the loan forgiveness and the credit. So no double, no resubmitting of that. But we do think that, employers, because they didn't know about this, that they were going to be able to take this credit, they shouldn't be penalized. So they should be able to do both. So.
And Kristen, just to give you a breath there, that was quite an explanation, some great examples. I summarize this: we're going to work this out. We're going to work this out. I mean, and we know. There's only 1/3 have been submitted for forgiveness. 1.3 million loans have been submitted for forgiveness. Those aren't going to get refiled. I mean, I can just tell you the practicality of that. So we'll work it out with some other type of documentation done that you can build a file on and apply for the ERC, and the tax executive committee is doing great work here. And then clearly you'll take this into account if you haven't applied for forgiveness yet, so you can just make your life easier. So I think a lot more to come on this, and I know we've got even some webcasts coming up. But I'll let you continue. I don't know if there's anything else that Lisa wants to add, but as I said, I'm confident that we'll work this out and provide some good recommendations and direction on how to get this done.
Absolutely.
If we can go to the next slide, we'll stop teasing everybody. Here's how you can find Chris's webcast next week, and it's going to be 75 minutes of employee retention credit start to stop. As Chris mentioned, we're waiting on that guidance for how to layer the wages, but Chris and her team are really working hard on the advocacy and efficiency aspect of allowing the borrowers who need this to be able to use it. And there's so many questions, Chris, on ERC, so I'm so thankful you're here. And I'm just really looking forward to next week's webcast.
Absolutely. Thank you.
Thanks. And we'll be having more about ERC and PPP on future town halls. So thanks, Chris, for that overview. And we're going to go into, we'll got lots of questions. We've got lots of questions coming in, and Lisa and I will grab a couple. But just one thing that we want to talk about is just continuing all of us to think about stepping back, 2021 plans, priorities, where you're making the investments, client focus. I'm talking to some firms right now about client focus around the PPP process. And, you need to make, intentional decisions on what you want to do with these different opportunities. There's lots of opportunities and lots of issues to address. So I see lots of good questions coming in. We continue. One thing we're going to do, we've got the Resource Center, the AICPA, SBA Resource Center. We also have some materials that we are putting on CPA.com related to the CPA loan portal, and we also have some special dedicated, already recorded overviews on some of these topics, in particular the CPA loan portal that we just covered. So Lisa, is there anything that you want to comment on, or maybe take a question that's coming in? I think we're like usual, we're well over 1,000. We got close to 10,000 attendees here, so there's a lot of good questions coming in. One thing I hope everyone appreciated is that we're going to always now send out the top 7 or so questions with answers after our town hall. We have like this town hall newsletter that we're sending out. So Lisa?
We got a question that is around whether or not we have sample engagement letters where the CPA is acting as an agent. And our friends at Aon and CNA through the AICPA member insurance program provided us those templates. You'll find them on our site at aicpa.org/SBA. You can go there to find that. Someone's questioning me on my math on how long an hour and a half is. So, I'll work on my math skills. Lots of good questions about ERC. So make sure that if you aren't getting the link through the slides once you've downloaded those, you can find that on the AICPA store. It's going to be a great session.
So Lisa, with that, let's just go back to the slides, talk about some of the available information that we have out there. We've got the recorded AICPA town halls. We will be publishing today's town hall a little quicker. It will be published later this early evening. You can share that with others. I think the opening portion we had high level about status of the lenders, and then Lisa's high level overview. You may want to share that with others, and a good way to do it is through these AICPA TV archives. Here's the resource page, which most of you are familiar with, aicpa.org/SBA, which has a lot of the information that we're covering today. Another big announcement, tomorrow, January 15th at 10 a.m., individual licensed CPAs will be able to apply and register for a .cpa domain. So we're moving to general availability. I know there's a lot of interest on that. So you can find out information at domains.cpa. If you're an individual licensed CPA, like Lisa Simpson here, she could go after simpson.cpa. Just lots of information there on that opportunity. We now have a podcast available for the town halls. It's a very convenient way to listen to the town halls. So here's information on that, getting it through Apple, Google, or Spotify for those of you that leverage these podcast platforms. So the team did a lot of work, and all of the archives are available on the town hall. Twitter and LinkedIn and social media is a great way for us to stay in touch with you. Today we brought you the latest information. When we share things on our site or via these social channels, it's always the latest information. It's very dynamic. And even this week, we said we'd heard that all lenders would be open as of Friday. Turned out that the SBA is still doing it in a phased approach with 5,000 lenders. So what we do is we share the best available information with you on town halls and through these other channels. Encourage you to leverage them. They're really helpful in times like this. So here's the plan. We're in sprint weeks. This is a marathon, maybe a triathlon, but we are in a sprint week, and we're going to have another town hall next Thursday, January 21st. Barry Melanson will be with us. He'll be providing some great perspective on how he's seeing the strategies firms are putting in place, and he'll also comment on some of these major legislative items that we've been discussing in these programs. So thank you very much for your time today. Thank you, Lisa. Thanks to everybody who's helping us put this information together. We look forward to seeing you next week. Have a good weekend. It's going to be a busy weekend, I think, for many of you. And we'll be here supporting you and really doing everything we can to help you support your clients as they move into this next phase of business relief. So thank you very much.
Thanks, everyone.
Thank you for your participation. You can now subscribe to the AICPA Town Hall series on your favorite podcast platform, as well as watch archives on YouTube and AICPA TV. Tune in for live broadcasts Thursdays at 3 p.m. Eastern Time.